Listen, there are only two concepts you really need to understand in order to depict where the market's going every single day. These concepts are very, very simple. It's just about tying the two together and realizing what actually happens. So listen, lock in, and you're going to be looking like these two here once you realize the two things the market only ever does. So right here, internal and external liquidity. This is the only two things you need to know about. So price goes from internal liquidity to external liquidity. Once it goes from external liquidity, it then goes to internal liquidity. And this cycle just repeats itself over and over and over again. The best thing about this rule is it can always be applied. Price is always moving in one of those two directions. Price is always moving from internal liquidity to external liquidity, or from external liquidity to internal liquidity. And this is pretty much the essence of how trends form. So let's get into the definitions. What is external liquidity? What is internal liquidity? So external is just the current range high and low, right? And the internal liquidity are the fair value gaps or order blocks, right, within the current range. So super, super simple. If you don't know what either of these are, just Google it, and I'm sure Google AI will tell you exactly what they mean. For the external liquidity, when we're talking about the range high or low, you want to focus more on the one that's in the trending direction. So if we're trending to the upside, then you want to be focusing on the range high as your liquidity. If we're trending to the downside, you want to be focusing on the low as your liquidity. But they both count, all right? But that's just a little tip. But you'll understand how it works in the next slide. So here you can see our current range in price. We've got our external low and our external high, making up our external liquidity. So as you can see, it's literally just the top of the range and the bottom of the range. And our internal liquidity, here we've got our fair value gap. And you can use an order block here, a breaker block, whatever else you really want to use. Doesn't matter. But as you can see, pretty simple, right? External and internal liquidity. So what price does in this range is it will go into our internal liquidity and then move from that to our external liquidity. Once we've done that, we'll then come back down into our internal liquidity again and then move back up to our external liquidity again and then down into our internal liquidity again. And now you're probably starting to realize this is essentially how trends form. Trends go from the internal to external liquidity, internal liquidity to external liquidity, internal liquidity to external liquidity, internal to external, etc., etc. So let's look at this in the real market terms. So this is Euro GBP on the weekly time frame. So it's completely up to date and you can sort of follow it through on your own chart. So here you can see we've got an external high and an external low and an internal fair value gap. So we should go from our internal fair value gap to our external high. You can see that's exactly what we did. We filled our fair value gap and then moved up to the high. So we've gone from internal to external. What do we do next? From external, we go to internal. So that's exactly what we did. As you can see, price came all the way back down to our internal. So now we've gone from external to internal. And after that, of course, we go from internal to external up the top there. And boys, that's pretty much about 3-4 months of price action that you could have had directional buyers for. So simply. Like, look how simple this is. Tell me you didn't already know this. You just weren't putting it together. And the way we want to be capitalizing on this is, for a start, when we're trading down, you can use this as just pure directional bias. Just assume that we're going to have bearish days. Same way when we're moving up from our internal to our external, just assume we're going to have blue days, because we probably will. Right, but the best way you can trade it is at these points here. When we're at the points from our internal moving to our external, right, you're going to get the best entries. And as you can see, the entries are going to come thick and fast. And these are going to be those weeks. You probably realize it seems like you just have them weeks out of nowhere. They're just amazing, giving you all the best setups and then pretty dry for the rest of it. And this is why, because you're missing those key points where we go from internal to external and then external to internal again. So you really need a time-based entry model in order to properly trade this successfully in the live markets. So I'll leave a link in the video there to my strategy, which I trade every single day, my time-based strategy. I'm also live every single day at 8 a.m. and 1 p.m. So I'll leave a link to my most recent live at 8 a.m. there. But obviously I'm live every day, so come check them out. And I'll also leave a link to my Discord there. Get in the free community, boys. The best community in the UK. I'm pretty sure Europe, but the best community for trading if you're trying to properly take this serious. I've also got mentorship and signals in there if you want to check it out. But boys and girls, appreciate you watching this video. Hopefully you learned something new. Make sure you drop a like on this video, subscribe and turn the notification bell on so you never miss when I go live or upload a video, boys and girls. Appreciate you watching, and I'll catch you in the next one.